I have to say Happy New Year. I think it's the year of the dragon, and Happy Valentine's Day. I hope you all remembered that today. All right, so it's hard to believe. This is and somebody may correct me on this. I think this is the 13th year that we've hosted this event with Grubb and Ellis, and think about all the things that have happened in those 13 years and the different mayors that we've had. It's a thrill and an honor to bring together the mayors of these two great cities for a look at the state of the cities and our region, a little bit of a look into the future. We're delighted to have all of you here this morning to listen to our mayors, and I think there's well over 600 of you, so thanks for making this your morning. Last year was the first time that we had these two very special mayors together, as each had just assumed the role. So it'll be very interesting after a year on the job to hear their perspective and what a year it has been. So if Mayor Lee is in the room, I saw him out there we want to congratulate you, Mayor Lee, on your recent election and inauguration. And Mayor Kwan, we're just so thrilled that you're here again, and congratulations on last year's election. And certainly both of you have been very preoccupied, so to speak, with, that's the last joke like that, all right, but with many challenges that you really didn't foresee when we met last year, and many opportunities as well. Our tradition is to alternate this event between the two cities from year to year. And last year, we hosted the event in San Francisco, which is why we are here at the Oakland Convention Center this year. So Mayor Kwan, thank you for being our gracious host this year. And we're delighted that Mayor Lee traveled across the bay to be here in Oakland. Now, doesn't this convention center look fantastic? It's really been quite a great renovation throughout, and if you look at the hotel too. So really, really terrific asset for this city. So I hope that your year is off to a good start. I'm personally feeling rather optimistic as we talk to the many businesses we interact with every day and every week. So this morning we're going to start our program with two speakers who will share information about the economy, the outlook for real estate and investing, and then we're going to hear from our mayors. It's a great time to be talking about the economy because it at least appears to be getting a little bit better, maybe in fits and starts. We're hearing some good news on the job front, not nearly enough yet. Last year I would have said we started the year with a better sense of optimism than the year before, and I think this year even a little better. So I'll just ask a little poll, who does think that the economy in 2012 will actually be better than 2011? Good, that's about maybe half, I think, maybe not. So, well, who thinks that we're lucky to be in the Bay job creation, the general climate for business and the regional economy? So before we get to our program, I want to thank the organizations and people who made all of this possible. I will say now, though, you may have questions that you would like our moderator to ask the mayors. I'll ask this a couple of times, but if you'd like to send them up early, there are index cards at your table, so just hold your hands up high, and somebody will come and collect them and give them to our moderator, who is Managing Editor Jim Gardner. So this event is jointly presented by San Francisco Business Times and our title sponsor, Grubb & Ellis. Soon we'll hear from Dan Cressman, who's Executive Vice President at Grubb & Ellis and our partner in presenting this program. And Grubb & Ellis, by the way, was founded in Oakland 53 years ago, and they co-founded this event with us 13 years ago. In addition to Grubb & Ellis, we thank our generous sponsors, starting with City National Bank, which is also a longtime sponsor and partner and provides us with the outlook on investment and finance each year. So we want to thank Bob Brandt, who's Executive Vice President for the region for City National Bank. City National is the nation's 26th largest bank with more than $23 billion in total assets and 79 offices in the Bay Area, Southern California, Nevada, New York City, Nashville, Tennessee, and Atlanta. And City National provides entrepreneurs, professionals, their businesses, and families with complete financial solutions on the way up. We also want to thank Golden Gate University, which has also long been a sponsor of this event, and Dan Angel, president of Golden Gate University. You'll see him up here in just a minute. And for over 110 years, nonprofit Golden Gate University has been helping adults achieve their professional goals by providing undergraduate and graduate education in taxation, accounting, law, business, and other related areas. And GGU is California's 5th largest nonprofit private university, enrolling nearly 5,000 students and having over 67,000 alumni, offering weekend and evening courses in downtown San Francisco and online through the university's award-winning cyber campus, so thanks to Golden Gate University. And Kaiser Permanente, truly an institution that is integrated into the fabric of the Bay Area economy and our healthy communities. So Kaiser, founded in 1945, nonprofit integrated healthcare organization with physicians, nurses, and staff working in collaboration to provide quality care and address the healthcare needs of communities served by the organization. Kaiser Permanente Northern California region serves almost 3.2 million members, includes 5,000 physicians in the Permanente Medical Group, and about 54,000 employees. And the region has 19 major medical centers. Each year, Kaiser Permanente donates about $300 million to various community programs in Northern California. We also want to thank the team at WebCore Builders. Here today, Jess Peterson and Shelley Doran, both senior vice presidents at WebCore. Among the many iconic buildings built by WebCore are Oakland's beautiful cathedral, the Academy of Science in San Francisco. WebCore is currently at work on some public projects such as SF General, the SFPUC, SF General Hospital, and the Trans Bay Terminal. Since its inception in 1971, WebCore has become known for its innovative and efficient approach, wide range of experience, cost-effective design, build methodology, skill in concrete construction, expertise in the use of technology in construction. And currently, WebCore is ranked in the top 10 of largest general contractors in California and consistently ranked in the top 5 green contractors in the U.S. So thanks to WebCore. And longtime sponsor, returning again, is Oakland law firm, Wendell Rosen Black & Dean. Thanks to Dan Rappaport, managing partner, Zach Wasserman, partner at Wendell Rosen Black & Dean. This firm, we've got a lot of long-standing firms here. More than 100 years in Oakland, continues to be a leader here and throughout the Bay Area. Firm attorneys have played a role in many of the infrastructure projects, commercial and residential developments, and business deals that have helped to shape this community. And Wendell Rosen, with the handy little tool on your chairs, reminds you of the importance of having a complete set of legal tools at your disposal. And the firm helps Bay Area business leaders in transactional and litigation matters across multiple disciplines: real estate, construction, land use, environmental, corporate, IP, technology, employment, green business, bankruptcy, estate planning. You've got it. They are there for you. Call Wendell Rosen. So thank you. Many thanks to our partnering associations who help promote this event: BOMA San Francisco, San Francisco Chamber of Commerce, San Francisco Center for Economic Development, Oakland Metropolitan Chamber of Commerce, SPUR, Emeryville Chamber of Commerce, and East Bay EDA. Thanks to all of you for partnering with us. And I know I will miss some of you, but let me extend a welcome to the public officials that I have been alerted are here. From the City of San Francisco, Ed Reskin, Director SFMTA, Monique Moyer, Executive Director Port of San Francisco, Jennifer Matz, Director of the Office of Economic and Workforce Development, Todd Rufo, Director of Business Development, Office of Economic Workforce Development. From the City of Oakland, Ignacio de la Fuente, Councilmember District 5, Deanna Santana, City Administrator, Fred Blackwell, Assistant City Administrator, Omar Benjamin, Executive Director of the Port of Oakland, and Pamela Calloway, who is the chair of the Port Commissioners Board. I know I've missed someone. Forgive me. If someone wants to send up a card, I will acknowledge you. So, very quickly, Just have to mention when I have this many people in the room, a few things about the Business Times. We had a great year. Everything that's supposed to be up for us is up, so hopefully that's a good economic indicator, and we're off to a great start in 2012. Hopefully you are a subscriber, and you read our economic forecast issue. Hopefully you receive one or more of our free email products. We just launched a weekly, it's called Structures Commercial Real Estate email news, free every Thursday. And it will give you an early alert to some of the things in our print edition. You can go online and sign up for any of them. On the print edition, where we have unique premier content that you have to pay for, we're offering a $15 savings on a full-year subscription, full access to premium content, and a book of lists, which was just printed. So if you want to see our circulation team, leave your card. They'll enter you into a contest for a $50 gift certificate at Ilford now, and you'll be well armed for doing business in the Bay Area with all the information we provide every week. So hopefully you are armed already. So we do this program every year. Oh, also, I was told if you're tweeting, I know you're all tweeting this morning about this program, you can do hashtag SFBT events, and you'll be eligible for a prize. Okay, just tweet away. All right. We have information every day, every week, every hour for you on our website. We do this program every year because we truly love these two cities. We kind of like to think of the great dynamics between the two of them. We think it's really neat that our two mayors, which we really saw on stage last year, are longtime friends and colleagues, and that is a wonderful thing. So who knows how much they share and the opportunities and possibilities that come from that. We do know the economic vitality of each city impacts the other. So we're going to have each mayor share his or her vision for the future, share their priorities, biggest challenges, and how they're tackling them, what they're doing to improve the business climate, and how are they bringing businesses to their cities or preventing them from leaving, and how are they dealing with the loss of redevelopment funding, staff cuts, budget deficits. And what about those sports teams and stadiums and sailing events? All right, I can't wait to hear what they have to say. What opportunities exist overseas with China? So before we get to the mayors, we'll get some expert insights on the economy, what the real estate outlook is, and a look at finance investing. Are we seeing more green shoots of opportunity? So let's begin. For a look at the real estate outlook, Dan Cressman, Executive Vice President at Grubb & Ellis, has been our partner in the Mayor's Forecast since its inception. Dan's been actively engaged as a broker in the sale and leasing of commercial real estate in San Francisco for the past 30 years. He most represented the University of the Pacific Arthur A. Dugoni School of Dentistry in the acquisition of their new SOMA campus at 155 5th Street in San Francisco, and is handling the current headquarters office expansion for online retail giant Macy's.com. So Dan is a true expert, knows everything about every building. Please welcome Dan Cressman.
Mary, I just have to say the San Francisco Business Times is by far the best source of business news found anywhere in the Bay Area. And every week we go to that Business Times, and actually it's every day now, and I think it's every hour and maybe every second soon with all the online news that we're getting from the Business Times. But thank you, Mary. I'd also like to welcome Mayor Kwan and Mayor Lee and thank them for participating in our annual Forcast breakfast. This is the premier real estate event in the Bay Area. And happy Valentine's Day, everyone. I'd like to wish my beautiful wife, Vicki, and my lovely daughter, KK, who are with me here today, happy Valentine's Day. And thank you all for climbing out of your tents and your sleeping bags to occupy the Oakland Convention Center here this morning at such an early hour. Now let's see, here we go. It's been a tough year for the cities of Oakland and San Francisco, both who have been handed some very large lemons to deal with. But before we get feeling too sorry for ourselves, let's look at someone who's also been dealt a few lemons. President Obama, he's been dealing with record unemployment, the bankruptcy of General Motors, Osama bin Laden, 2 wars to clean up, but somehow, in spite of all his problems, he's turning lemons into lemonade. Lower unemployment, a new GM, no more bin Laden, and an imminent end to two very pesky wars, which, when complete, will have earned him his Nobel Peace Prize. So let's start by reviewing the real estate metrics for Oakland and San Francisco from the past 12 months. Vacancies were split in 2011, with San Francisco dropping to 12.1% and the Oakland CBD moving up to 16%. In 2012, Uber demand for high-tech space in south of market will lower vacancies to single digits and will migrate into north of market commodity space, such as the LinkedIn lease just completed at 1 Montgomery. Office rents were also split, with rates dropping to $28 in Oakland and rising to over $40 per square foot in San Francisco. Rents in San Francisco will rise to the $60 or even $70 per square foot levels, which will trigger new office construction for the first time in over 4 years. Oakland, are you listening? Investment sales volume in the Bay Area continued to recover in all product types and rose to over $12 billion in 2011, an increase of 57% from the previous year. Projections show an increase in excess of 100% for 2012. Now, the top office leases during the past 12 months in San Francisco and Oakland, these experienced rising office leasing activity, with many tenants rushing to lock in long-term rental rates prior to the big increases expected in 2012 and 2013. Mark Benioff of Salesforce continues to be the market maker with his 400,000 square foot lease signed at 50 Fremont this past January. Now let's go back to the lemon truck and turning lemons into lemonade. San Francisco had a few lemons handed to it this year. Wouldn't you say so, Mayor Lee? But in spite of that, the city that knows how continues to show us it knows how to make lemonade. And let's give you a few examples here. The America's Cup. The events for this well-publicized multi-million-dollar America's Cup will be held on San Francisco Bay starting this summer, with the grand finale scheduled for September of next year. The Port of San Francisco is wisely using the America's Cup as a catalyst for major revitalization of its piers, with projects such as the new $100 million James Herman Cruise Terminal at Pier 27 and the new $220 million Exploratorium Museum at Piers 15 and 17. The $4 billion Transbay Terminal project is well underway, with demolition complete and new construction coming out of the ground within months. Now, Mayor Lee, if you think San Francisco had lemons this past year, you should talk to Mayor Kwan. Here's a lemon. Here's another lemon. And here's an even bigger lemon. Oakland, it's time to start thinking about making some more lemonade. No comment required here. Here's some more lemonade with the soon-to-be completed new east span of the Bay Bridge, which lights up every morning now, and I saw it this morning as I drove over. Also, in the New York Times, Oakland making it to the number 5 on the New York Times top 45 places to go in 2012 list. Oakland's revival of its Uptown district by restoring the historic Fox Theater and the magnificent Paramount Theater for future and current generations. Adding thousands of residential units to the urban marketplace with Oakland's 10K housing plan and the revitalized nightlife with sophisticated clubs and restaurants. And Kaiser Permanente and Alta Bates hospitals, adding close to 600 beds to the much-needed stock of medical facilities in Oakland. Now let's also talk about a few trends occurring in the marketplace. Rolling office space is where office rent is being measured in price per gallon versus price per foot. Over 6,000 employees per day, or 1.5 million people per year, are being shuttled in Wi-Fi-enabled rolling offices between San Francisco and the peninsula. This trend will continue in a strong way. Also, old vacant buildings are taking new life as tenants and new owners and new owner users occupy newly clad and newly refurbished offices. such as Riverbed at 680 Folsom and the University of the Pacific's Arthur A. Dugoni School of Dentistry at 155 5th Street. Another trend, here's a newly tagged warehouse located 2 blocks from San Francisco's Anchor Steam Brewery at 16th and Wisconsin. The graffiti artist who did this is now a Facebook millionaire. Thanks to bad boy billionaires Mark Zuckerberg and Sean Parker, who recently partied here with another bad boy, Snoop Dogg. They instantly gave this neighborhood further credibility as the social media triangle. The social media triangle, or trisoma, is a south of Market neighborhood full of adventurous young techies pounding out online games from their keyboards at Zynga headquarters or mobile apps for Android in brick and timber warehouses. Now, another trend we're seeing is the tech side, as we all know and we all read about. But what you see here are 9 buildings in San Francisco as an example of over 3.5 million square feet. And these were 9 predominantly empty buildings, all of which now are committed by new tech tenants, all within the last 12 months. And here are 5 entitled office projects representing 1.7 million square feet. With increasing rents, many of these will break ground in 2012, but will not be delivered to the market until late 2014 or 2015. So as San Francisco waits for this new office space to relieve its pending overcrowding, the growing tech firms we read about every day will have nowhere to call home. Oakland, it's time to get ready for the next generation of occupiers, the office-occupying, rent-paying occupiers. So throw out the welcome mat and dust off home plate, because there's sure to be some big pot flies coming your way. Thank you, Mayor Kwan and Mayor Lee, and don't forget to bring some ice. Thank you.
Thank you, Dan. And we know Oakland is home to some great tech companies like Pandora and Sungevity, so that the table is set with the tech excitement happening in Oakland as well. Now a look at the financial outlook. We're delighted to have Paul Single, Senior Vice President, Director of Fixed Income Investments for City National Asset Management. Paul is in charge of City National Bank's Asset Management and Investment Advisory Group and has been with the bank since 2003. City National Asset Management provides custom portfolio management and expertise in investment management to financially successful individuals, families, businesses, foundations, and municipalities. And Paul's been managing investment portfolios for more than 30 years, focusing on mutual funds, institutional accounts, and high net worth individuals. And he authors the bank's weekly economic report and economic data commentary. So please welcome Paul Single.
Good morning, all. It's a great turnout today. It's great to see you all. Mayors, it's an honor to be here with both of you. I'd like to spend a little time today talking about what's going on in the global economy, what are some investment opportunities, and some of the risks that are out there for a lot of people in terms of how they're looking at their investment portfolio. Quickly, the United States economy is gaining momentum. It's on a nice upward trajectory. Last quarter's GDP number was the strongest of last year, and it looks like the outlook will continue to do a whole lot better going forward. There are a couple of other things that are concerned I'll go through quickly. The next one is that the austerity plans going on in Europe will probably cause a recession if Europe's not already in a recession. China needs to avoid a hard landing, and those 3 topics I'll talk about in a little bit more detail. The next point is that politicians in Washington really need to extend the stimulus plan that they have in front of them in terms of extending the unemployment benefits and in terms of the tax cuts. Yes, the U.S. economy is doing a lot better, but it still needs that stimulus to keep going. And then finally, the unemployment rate is still uncomfortably high. It's come down. It's at 8.3%. It's down from the 10% level. In California, it's at 11.1%, down from the recent high of 12.5%, but it needs to do a little bit better. Now let's take, so our outlook on this economy is that it's sunny with partly cloudy. But the United States is probably the most important part of this outlook. It is doing well. This chart here is showing GDP growth. This is a measurement of the economic output in the United States. It's the broadest measure that we have. And if you follow the red line, you can see that the year-over-year change is starting to trend upward. The green columns represent the quarterly change. The blue columns represent the market's expectations of the future. All of it's annualized, so it makes it easy for comparison. But you can see that we're continuing to move and somewhere between a 2 and 2.5% growth going forward. A common analogy would be it's like a car that's in second gear trying to get into third gear. Yes, we will get to our destination, but it's going to take a little bit slower. This is not uncommon. You know, the credit crisis ended, or excuse me, the credit crisis started just 5 years ago. Last week was the anniversary. HSBC had to announce that they had to restate their previous year's earnings because of losses in subprime loans. Back then, no one knew what a subprime loan is. Everyone now has an opinion about them. But that was the start of it. It was 3 years ago that the Fed dropped interest rates to near zero for their overnight rates. It was a year and a half ago that the recession ended. The recession that we had was extremely severe, and it was a financial recession, and it takes a long time to recover out of them. But we are on the right trajectory, and that's the important thing in terms of the outlook for this economy. Inflation. Here, this chart is the Consumer Price Index, the broadest measure of inflation, and it goes back to 1975. I'm sure many of you in the room might remember the very high levels of inflation that we had back then, but now it's down around 2%. This is a level that's acceptable for the Federal Reserve Bank, and this allows them to use their tools to try and stimulate the economy because they don't have to use those tools to try and fight inflation. But this is the concern, housing. And I love this chart because it puts in perspective how bad the housing market was affected in this economy by comparing it to the overall economy. The overall economy is the green line, and it measures the percent change in the drop of the economy from the recent peak. You can see it dropped about 6%. Now look at the red line. That's the housing market. You can see how badly that was impacted, and it hasn't recovered yet. The economy has recovered. We are at a point of economic growth higher than we were before the recession started. But housing, that's not the case. And housing employs an awful lot of people, and that's part of why this recovery has been so slow. Now, China, this is the big deal. If you take a look at the global economy, the G20, which is the eminent group of finance ministers, the United States is number one. We are the largest economy in the world. China is now number two. China, in a few years, will be number one. The United States is richer on a per capita basis by a magnitude of about tenfold. But China will have more economic output than the United States. They will move into G1. It's a force that has to be reckoned with. Now, they got this way because they've had very good growth for a number of years. But it's going a little bit too strong. There's some small bubbles that are popping up in different parts of their economy, and they're trying to slow down the economy. Slowing down an economy, every government can do that. What the hard part is controlling that downward trajectory. In most cases, countries that try to slow down their economy, they go into a crash, they go into a recession. But China's different. The best way I have to describe China's economy is still a line from Yogi Berra. It's 1/2 market economy, and it's 3/4 centralized controlled economy. They are big enough, they are powerful enough that they can probably pull this off. We'll have to see how it happens, but that's an important thing for the world economy. Europe, on the other hand, that's another story. If you believe in the Mayan calendar that the world will end in 2012, Europe might be the reason for it. Europe's got an awful lot of problems going on. In the news, you read about the sovereign debt crisis. That's one problem. But that's probably the least problem that they have. The second problem that they have is most of the banks over there are undercapitalized. They need to increase their capital. As a result, they can't make the loans that are needed to expand the economy. And that's a big concern. And banks are bigger in Europe than they are in the United States. They're much more prominent in terms of driving the economy. And the third and most important part is the fact that they are really going into a recession. And it won't be as big a recession as what occurred in 2008 and 2009, but it is going to be a more important recession in terms of downward movement because they're in a much worse position. You know, Germany is doing very well at an unemployment rate of 5%. It's the lowest they've had since unification. But take the southern countries. I mean, Spain, their unemployment rate's at 23%. That's what the United States was like back during the Great Depression. So as a result, where they are in terms of outlook is Europe has an awful lot of problems to work out. And Germany is not necessarily the savior. Take a look at this chart here and focus on the blue. This is an example of how exports affect an economy. In the United States, we export goods to Europe, but it accounts for just 1.4% of our GDP. It's a small portion. China, it's about 5%. Germany, it's 21%. Germany needs the rest of Europe to perform well and get out of this recession so that they can continue to expand as an economy. Germany has a chance of going into a recession. It may very well happen. Now, on a more upbeat, California. California is doing quite well. Oh, thank you. I like this chart here because it shows how California is doing relative to the United States and Texas. You know, during this political season, we heard about how great an economy Texas had. But as you can see, this is measuring the strength of the economy. California is in the blue. You can see we're at a much faster pace than the United States, and it's about the same sort of pace that Texas is at. And that's a very important thing. Now, Texas benefits from a couple of things. Their economy does quite well for the fact that their largest employer is the federal government. Well, in a recession, the federal government doesn't lay off people. The second largest employer is the state of Texas. They don't tend to lay off people. And all the support organizations that work with those people that are employed don't tend to have the financial situation that we did in California or the rest of the United States, where corporations were laying off people. But one of the most attractive things about Texas is that real estate is very cheap. Austin, Texas is the most expensive metropolitan area. Do you want to know what the median price of a house is there? You want to guess? $194,000. And that's, I'm rounding up. It's very cheap. So as a result, a lot of employers that need low-cost workers are moving to Texas. So that's one thing that they're benefiting from. So you can see on this list here, this is the 12 top changes in payrolls state by state. You can see California is number 7. Right above it is Texas at number 6. But look at all the states above us: Texas, Wyoming, Louisiana, Oklahoma, Utah, and North Dakota. What do they all have in common? What they have in common is that 200 years ago, it was swampland and dinosaurs died there. It's either oil or gas. California's in a much better position. We're a far more diversified economy. Agriculture is big. Manufacturing is big. Information technology is extremely strong. We have exports, large ports that export to Asia, the growing area of the world. And most importantly, California has a highly educated workforce. If you're looking for a job going forward, you want to have high education. That's what's going to be needed. Now let's quickly go over some investment ideas. Here's the view of the stock market during last year. As you can see, we started at the year at 1257, ended the year at 1257. They call it the roller coaster year. Start in one place, come back to the same place. It was safe, but there were some thrills on the up and down. In terms of taking a look at relative investment performances, you can see, when we look at different markets around the world, Greece, of course, had the worst performance. But the United States was able to squeak out a small increase, and that's because of the dividends on the stock market. So what we're calling ourselves is that we were the best, nicest looking house in a not so great neighborhood. But consider what we were worth 2 or 3 years ago. Then we were, the analogy wasn't with housing. The analogy was much more like we were the best, nicest looking horse at the glue factory. We've really improved an awful lot, and that's the theme that I want to drive home, is that the economy is on a nice upward trajectory. Last year, what the surprising part is that bonds were one of the great performing sectors of the market. Last year at this time, interest rates were at record low levels. Who thought they would fall even more? Well, they did. Well, Treasury bonds fell the most because of the safety need, but the bonds where most people invest their portfolio, they still had solid returns of 6, 7, and 8%. Now, which of these choices do you think had the best performance over the last 20 years? Stocks, bonds, oil, gold, personal residences, or REITs, which are real estate investment trusts? you can see that REITs had the best performance of all. Homes had a return of just about 3% over the last 20 years. And this is an important thing. Wealth created in homes is used by most Americans for their retirement. They buy a house, raise a family moves out, they downsize. The gains that they receive from that house are planned into their retirement. It didn't work out to be nearly as good as many other investments, especially when you take into account inflation. You can see that the gain is very, very small. What if we add in what people do with transactions for their own personal accounts in terms of purchases of mutual funds? You can see that the return is not nearly as high as what one probably needs to retire. And that's the important point I want to make in this chart. When you're looking at your investment portfolio, you really need to think about other alternative investments, that you need to look at something else going forward. Of course, this is what happened in history. What goes on in the future is something different. You don't use a rearview mirror for your driving, but you need to look at different alternative investments to increase your wealth. So in terms of the bond market, we can expect interest rates to continue to move down. Treasuries are going to be viewed as a safe haven, so those rates will stay quite low. Inflation is under control, and that you need to look at certain corporate bonds, high yield, and municipal bonds. And this is why high yield is attractive. The green line shows the yield on high yield above a basket of treasuries. You can see it's about at the average level that it's been since the late 90s. But look at the red line. The default level is near the lowest levels. So on a risk-reward basis, owning high yield funds are an attractive place to be. Now, equities is something that we're very excited about. We've been excited for about 2-3 months now, and January's been off to a good start. But the capital buildup, the profit that many people have made in bonds are starting to move into stocks. There's attractive, well, let me show you the charts, and it's much easier than reading it. In terms of metrics that are used to determine whether stocks are cheap or expensive, this is probably the most popular one in terms of the forward PE ratio. And you can see that it's below the long-term average, meaning stocks are relatively cheap. This one takes a look at the earnings yield and compares it to Treasury. You can see it's at record highs going back 50 years. Some people think you should compare it against corporates. It's at a record high for the last 30 years. Its stocks are relatively cheap, but this is my favorite one of all. The yield that you receive on a stock relative to that of a 10-year note on almost half the S&P 500, the dividend yield on the stock is much higher. And think about it. Over a 10-year period, that bond will mature, no capital appreciation. Over 10 years, you'll probably find some capital appreciation in that stock. So just to end up with a couple of conclusions here, that we continue to expect market volatility, but it probably won't be as severe as last year. That there are opportunities in the bond market, and you still need an allocation to bonds because you still need a portion of your portfolio safe. That it's probably going to be a very good year for equities in the United States, not so much in Europe. And that the important thing with your portfolio is that you need to stay diversified. Thank you very much, and good luck.
Thank you, Paul. And now we're going to invite our mayors to the stage to tell us about their priorities, outlook, and visions for their cities. San Francisco Business Times Managing Editor Jim Gardner will moderate the panel discussion with the mayors. He has a number of questions. I'll remind you, if you have questions, hold your cards up. We'll gather them. Think of them now, and we can get them up to Jim. Each mayor is going to speak for a few moments, and then Jim will lead the discussion. So since Oakland is the host city, Mayor Kwan is gracious enough to allow Mayor Lee to go first. And to introduce Mayor Lee, please welcome Gregory Adams, President of Kaiser Foundation Health Plan, Kaiser Permanente, Northern California, and a highly respected leader in healthcare. Greg Adams.
Thank you, Mary. Just a few modifications to your statistics. Kaiser Permanente in Northern California actually has 7,000 physicians, 65,000 employees, 21 medical centers, and we actually give about $700 million a year in our community benefit programs. Also, I just wanted to note that one of the lemonades in Oakland that we unveiled this year was the Remember Them project at the new Henry J. Kaiser Park. And if you haven't had an opportunity to see it, He really should. It's quite a special place. Kaiser Permanente is pleased to be partnering with the San Francisco Business Times to host this very important discussion. The issues we face as business leaders and members of the community provide us with a unique opportunity in the coming years and many real challenges. It is vitally important that we stay connected and informed so that we may continue to build a vibrant Bay Area economy. As one of the region's largest employers and the largest integrated delivery system in the country, our reason for being is simply to improve health. We exist to provide high-quality, affordable healthcare services and to improve the health of our members and the communities we serve. In fact, we're proud to provide care and coverage to many of you in this room. Now, I know that as business leaders, you're probably all concerned about the affordability and quality of health care as you assess and seek to understand the impact of health care reform. Be assured that Kaiser Permanente is committed to quality and affordability, and that it's at the center of our mission as an organization. In addition to staying true to our mission as a core value, we remain committed to working with all of you to create a robust local economy and thriving communities. The most visible demonstration of this commitment is the 3 new medical centers that we have under construction in Oakland, San Leandro, and Redwood City. These new facilities symbolize our significant investment in the health of this region. And now it is my honor to introduce a man I believe who shares our commitment to a strong, healthy future, San Francisco Mayor Ed Lee. Ed was sworn in on January 8th of this year as the 43rd mayor of the city and county of San Francisco. Lee is the first Asian American mayor in San Francisco's history. Prior to his election, while serving as interim mayor, Lee championed balancing the budget to keep San Francisco safe, solvent, and successful by reforming city pensions, focusing on economic development, job creation, and public safety as his top priorities. Mayor Lee has worked hard to keep the economy and economic recovery on track, to create jobs for residents and everything that supports a thriving economic climate. During this term, Mayor Lee has said that he will keep his focus on economic development and job creation, taking responsibility for building San Francisco's future and making city government more responsive, efficient, and accountable through innovation and technology. Mayor Lee first began working for the city and county of San Francisco in 1989 as an investigator for the city's first whistleblower ordinance. He also served as the executive director of the Human Rights Commission, director of city purchasing, director of the Department of Public Works, and as city administrator. Prior to his employment with the city of San Francisco, Lee was managing attorney for the San Francisco Asian Law Caucus. Mayor Lee was born in Seattle. We know why he's here. My son's in Seattle. A lot of rain and dark and gray clouds. And as a graduate of Bowdoin College and UC Berkeley Boalt Hall Law School. Please join me in welcoming the very distinguished Mayor Ed Lee.
Good morning. Happy Valentine's Day, and thank you, Greg, for that very kind introduction. Mary Huss and Biz Times, thank you very much for inviting me here again. It's a wonderful opportunity to talk about the state of San Francisco, or our business climate, and what I'm trying to do to improve it, and how I can cooperate also with Oakland. And I just want to thank all of you, because you play a great part in our economy and what we do and how we do it. And I am very happy to be here this morning to join all of you, and I'm thrilled to be able to do this event again. A year ago, I stood before you, and I had only been in office for 7 weeks as the interim mayor of San Francisco. And at that time, the unemployment rate in our city was 9.5%. Our city was faced with about a $380 million deficit, and we were struggling with how to meet rising and increased costs in our pension and health care obligations. A year later, our city has come together to tackle pension reform and balance the budget. Most importantly, we put people back to work. In the last 12 months, we created jobs for more than 17,300 San Franciscans, bringing our unemployment rate to 7.6%. And that's the third lowest behind Marin County and San Mateo. But I'll tell you this. You know, I think as I study Marin County and San Mateo, you know, they got that wine up there in Marin County. I think we consume the most of it in San Francisco with all of our conventions. So I think we contribute to their unemployment rate. And in San Mateo, I noticed we've got a big airport over there that's bustling. So we have a lot of contributions to the other two lowest unemployment rates. And then just yesterday, our city controller's report gave us some more positive news about our economy, with revenues about $129 million greater than expected and projected in the first 6 months of our fiscal year. So I stand before you today just over a year in office and in my first year as a full-term mayor, saying that San Francisco's economic recovery is well underway, and after years of deepening unemployment and hardship for so many families, we are really turning the corner. But my message to you, to the business community, and to our public employee unions, to our neighborhoods, and to our constituents is this. The economic policies and the strategies that we've been pursuing and working on have been putting us back on track, but we also must stay that course. And though our revenues have surged from our economic growth, we must not be tempted to go back to spending habits and sprees that kind of delay the hard choices that we continue to want to make and that we've been accustomed, and that we've got to make the hard choices that we have accustomed to have been making the last few years. I think my hardest job for the next few months is going to be making sure that we don't return to those spending habits, and that we make short-term choices that get us that we don't make short-term choices that get us into more trouble that we've experienced in the past. We have, for example, in our economy, a requirement now by law that we balance our budgets not for 1 year, but for 2 years. And that's a much harder process to engage in, but one that we have to be very, very careful about. So more than ever, we must double down on our reforms, also double down on our innovation and our investment into our future, investment in our infrastructures. We must, for once, treat government and our responsibilities as mayors as families do. That is, when we find an opportunity to save, we should save it. We should reduce unnecessary spending. And most importantly, we should invest in our people and in our infrastructure and plan and save for our future, because it is still, as the two speakers before me, it's still unknown. Things may look good, but there's danger right around the corner, and I'm about not depending upon federal or state government any longer for the programs that we have to make our city successful. The building blocks of our economic growth have been very clear. We are attracting and retaining jobs through our tech and biotech companies and our clean tech companies. We have invested, and we want to continue our investment in small businesses. In my 17-point plan as I ran for mayor, we focused on job creation. We focused on creating a $5 million small business job loan program for our neighborhood commercial corridors. We are creating a job squad to make sure that our vacancies are reduced throughout all of the different commercial corridors in our city. But I'm very interested in making sure that we have an opportunity to manufacture things in San Francisco. Katie Sophus is here today from SF Made. She's joined us. She's our director of SF Made. That means that not only do we invest in our intelligent sources to sell and to manufacture, but I think that we can blend technology with manufacturing. Just yesterday, I was greeted at and kicked off the annual Music Technology Conference in San Francisco. And you could literally see the way that music content is being delivered today. And it's melding in with the technology applications that are exciting. So the Apple and the Googles and the Pandoras that Gene Kwan reminds me of is headquartered here in Oakland. They are finding new applications through the technology innovations that are going on in San Francisco and finding different ways to make sure that that content reaches people in their most comfort level. That's exciting. That's melding a whole exciting industry that used to be only in Hollywood, now has come forth and begun really sprouting in Northern California. And then within the hour of that, we opened the walls and we put in screws on the Pac-12 Media Center. And again, sports, like music, had a choice. They can continue the way they've done it, which is kind of locate in Hollywood and be more of a standard television approach, or they can think anew. Where the new technology is for sports and sports media is about bringing that content into all the different venues, and so they decided to locate their Pac-12 Media Center in San Francisco with the idea, with the foundation that our technology applications and the innovation that can go on with sports and all the sports figures can actually evolve and increase their market share with those applications. So we're excited about that. And we continue to invest in our international tourism and our travel. We have a program called China SF, something that I've embraced. We have 2 offices as a result of China SF, as a result of the work of our sister city with Shanghai, to increase business opportunities both ways. Finding companies like China's largest solar companies to locate their offices in San Francisco and sprout their Northern American headquarters here. And we have attracted one of the top 5 solar companies from China locating their offices in San Francisco. In exchange, we're bringing companies, whether they're architects and engineers and intellectual properties like Autodesk and others, they're locating their offices in China in exchange and getting help and support as the foundation for our China SF offices and increasing their international abilities. We want to bring those initiatives to Latin America and to Africa in the future and to India. So you'll see the models of China SF sprout during my administration to focus also in South America and these other international realms. And I look forward to making trips into those countries to establish those offices. While we are manufacturing and doing the kinds of strengthening of our technology and biotech, I also want to make sure you know that I formed a very exciting and new relationship with our Board of Supervisors to make sure that we create policies that support job creation, job placement, and economic growth in our city. We have ongoing a payroll tax reform. One of those monumental decisions that we made last year was to, as you know, negotiate with a number of companies, including Twitter, to make sure that they saw the possibilities of benefiting from our payroll tax exemption that was located for mid-market. Well, in those conversations, when we landed them and they signed their long-term lease, and we understood their arguments that we had to revise our payroll tax, we're well underway with that. We've had a room full of businesses advising us. All the different chambers and members of the Chamber of Commerce are now engaged. And for the next 2 months, we're getting that input about the best ideas going forward about how do we revise the whole payroll tax, with our hope that sometime in the next month or two we'll be able to introduce something for our November ballot. I've been a big embracer of our policy for hiring locally, and we continue to not only work in the construction area where we have a local hire ordinance, but to bring that principle to events like America's Cup, to all the larger events that are by principle. If they locate and have that event in San Francisco, we can discuss with them how to hire as many local businesses and local people and sustain that employment opportunities as possible. We've engaged in our technology companies primarily, but in many companies, financial and otherwise, training partnerships, strategies with our schools and how to make sure our youth are trained in the right areas, getting the right focus so that they can grow up in a city where not only can they see good schools, but that they can see the possibilities that if they commit to those sacrifices to get a better education, that they can join the $1 Million Club, as I've often said. Because without that $1 Million Club, you're missing out. Without that college degree, you're missing out on an opportunity to increase your marketability with jobs that we're creating in San Francisco. And in the technology world, we've found some great partnerships. In fact, we've created SF City, the Citizens Initiative for Innovation and Technology, Technology and Innovation. It's our partnership with the technology companies to create job postings and to create training programs that offer our young and our mid-career people an opportunity to get trained in those technology skills that our companies are looking forward to. And within 1 month of announcing that, we have over 100 technology companies that have joined in SF City. And thank you very much to those of you who have done that. We have stronger policy analysis for looking at legislation between the mayor's office and the Board of Supervisors that will gauge the impact on jobs and for small businesses. And we've signaled very strongly that we need to have businesses at our side to evaluate all of the legislation that we do so that we can understand its impact on business. That's the level of commitment that I've made, and working with the Board of Supervisors, I think we've signaled a new way of looking at things. Finally, we have invested in the foundations of our city that ensure all of us can live here. We are investing in infrastructures. This November, we will propose a parks bond to make sure that our parks are, again, world-class and that they serve all of our neighborhoods in the city. We've enjoyed a very, very lucky vote past November where our paving and our streets bond that will produce $248 million of anchor for our streets repaving, but also for infrastructure in our streets that allow Muni to move faster, less congestion, our curb ramps for persons with disabilities, a number of street parklets that will be had, bike lanes that will allow our bikers, who are a lot of them are these technology employees throughout the city, want to be able to have dedicated green lanes. All of that has anchored into a very strong vote, one that was very difficult to pass because it required 2/3, and we were able to do that. Very fortunate in our city to be able to have that anchor. And of course, improving our public transportation. Muni continues to be a challenge because of its infrastructure and its debt, and we will continue paying attention to that, and that is why we've got to be always investing in our future, and transportation is a huge part of that. But it's also, we've been very successful in gaining federal grants for that in the past, but also making sure that we can build infrastructures like the Central Subway that are well on its way. And you'll see a little bit of construction detours as you hit Union Square, but you'll see in the near future that we're going to be able to bring people north and south quite easily in our new subway. I would say to you, as business leaders here, that I'm going to be about investing in innovation for our city. We've got to innovate our way out of recession. And we continue to see that if we don't do that, if we don't embrace innovation, if we don't meld technology, we're going to lose steps very quickly. And that's why I've been embracing all these technology companies to start in San Francisco, to grow and to stay, because they also represent our future. I've often said that, and I've been both a participant and an observer and a relatively new mayor, but I will say this to all of you too. We've got to make sure that our city continues to be an investor-confident and an investment-friendly city. Whether your investment is a family, whether it's a small business, or whether it's investing in somebody else's business, no one is going to come to a city where the signal of the mayor or the board of supervisors or the lack of working together signals less than sure confidence that your investment will be a good one in our city. That's what is attractive about San Francisco. I will continue making that very strong, and everything that I do every day will be continue to create jobs in our city. Thank you very much.
Thank you, Mayor Lee. And to welcome Mayor Jean Quan, please welcome Zach Wasserman, who's partner at Wendell Rosen, Black & Dean, and very actively involved in this community. Zach Wasserman.
I want to join in the welcome to all of you here on this Valentine's Day, a day for all of us to cherish our loved ones, including our love of our cities, which is what we're talking about this morning. Wendell Rosen is a law firm founded 103 years ago in Oakland at 12th and Broadway, just across the street. We're still at 12th and Broadway. We've got a little better view, 24 floors up. And we're proud to be in Oakland, and we're growing in Oakland. We brought 3 new partners in last month, and we think we're going to bring 3 new partners in this month. On your tables is a toolkit that you can use, and a few words about the breadth and ability of the lawyers in our firm. We're proud to occupy Oakland. We've just renewed our lease for 52,000 square feet in the APC building, and we're here for the long haul. My job this morning is to introduce Jean Quan. You know Jean's story, and it's a great one. The first woman elected mayor of Oakland, the first Asian elected mayor of Oakland, the first Asian woman elected mayor of a major city in this country. She's proud of that, and we're all proud of that. You know a lot about her story. You know she's a champion for youth, for schools, and becoming a champion for economic development in our city. You know some of the difficulties she's faced. Some of them are old: crime, problems with our schools. Some of them are new and not necessarily expected, like the loss of redevelopment funds and Occupy Oakland. And she's had successes. She's brought a great new administrative team to this city with her city administrator and her staff, new fire chief, new police chief, and developing really strong leadership for our city. She's also made some mistakes, and she's had the courage to acknowledge them, which isn't easy for any of us. I know it's not for me, and she gets credit for that. The solutions to Occupy Oakland are not easy, and none of us can sort of spell them out. But I do think that all of us, whatever we think about the Occupy movement, whatever we think about how Occupy Oakland has been handled, can agree that not Oakland, not any city, should be expected to tolerate lawlessness or violent anarchy. And she has started, thank you. and she started the effort to make clear that Oakland will not tolerate it at all. But amidst all of these things, there are some good signs in Oakland. And I'm sure that the mayor's going to tell you about some of them. And I'm sorry this keeps booming. You know that the New York Times recognized Oakland as the 5th best place to visit in the world. Behind London, but ahead of Tokyo. And the tagline they used was, "Restaurants and bars amid the grit." We've got the grit. And if you want to see what that means, go down to Jack London Square, have a drink at Heinhold's Last Chance Saloon, then go right next door to Daniel Patterson's new restaurant at Haven, and you'll see the stars in the future amid the grit. You may not know that Newsweek recently recognized Oakland as the 2nd best can-do city in America. In looking at 200 cities, they evaluated an interesting set of criteria, and I want to read through them very quickly because I think you'll find them interesting. They looked at emissions, 13 major pollutants divided by the population to create a carbon footprint for Oakland. They looked at the increase in building permits, the increase in LEED certified buildings. They looked at the number of people who have health care. They looked at people over 25 getting college degrees. They looked at the increase in the number of people taking public transportation and walking to work. And on the basis of all of those, concluded that we're the 2nd best can-do city in this country. And we've known that for a long time. I want to end this with a couple of comments. Many of you know that I am very much a political animal and that I have had a very long love affair with this city, and it continues. So I want to give you a little bit of political advice. You probably know that there are a couple of petitions out seeking to recall Mayor Kwan. Don't sign them. Now is not the time to fuss with replacing our mayor in midterm. Now is the time to work with her, to support her and her administration and our council in making this the best city in America, the #1 can-do city in America. And with that thought, it is my pleasure and my pride to introduce to you Mayor Jean Kwan.
Well, this is an introduction I'm going to remember for a while. Okay, well, I'm going to address a couple of those points, but I know that the media, last week I gave the State of the City address, and the media was sort of disappointed that my speech was not occupied, and they said, well, why didn't you talk about them? I said, well, you know, based on the last arrest, actually more of them lived in San Francisco than Oakland. I wanted to talk about the state of the city and where Oakland's going. But before I do that, I'd like to, first of all, wish my good friend, Gung Hei Fat Choi. And the first time I spoke in front of the Business Times group, I said, you know, Gung Hei Fat Choi doesn't really mean Happy New Year. It means may you get rich and prosperous in the new year. And for those of us who are Chinese Americans, most of us are from Canton. We're from long merchant families, and probably for our families, being rich was the same as being happy. But also happy Valentine's Day. I'd like to know just sort of a little bit who we're talking to. So how many of you are from San Francisco? Okay, well, thank you, and very much welcome here. Stay for lunch. How many of you are from Oakland? Okay. The rest of the East Bay? Now, I bet some of you work in San Francisco but live in Oakland or the East Bay. How many of you are like that? Okay, all right, well, thank you. I always like to know who we're talking about. Well, Mayor Lee and I know that we're always in friendly competition, but the Bay Bridge economy is really one economy in many ways. I'm going to talk a little bit about Oakland's accomplishments and who we are, and my theme has been take a different or a fresh look at the city, because the city is probably not what you think it is. It's changing quickly, even as mayor, and I'm a pretty out there mayor, walking neighborhoods, visiting all the retail areas. I'm always surprised by my own city. But for the rest of the world, the difference between Oakland and San Francisco in this great California economy, which has slipped a little bit, now we're the 8th largest economy in the world. For the rest of the world, they see the Bay Area as one unit. In fact, in China, they see us as the golden triangle. They include San Jose. So, that, you know, the Oakland has the port, San Francisco has the banks, and they think that San Jose has Silicon Valley. And we know that's all changing, that we're all merging more and more into one economy. As Jerry Brown used to say, and I want to say this since it's a perfect setup with me from all the economic factors, is that they're running out of space. Our space is cheaper and more plentiful. And as Jerry used to say, it's faster to get to downtown San Francisco from Oakland than it is from most of San Francisco. So I'm glad that you came and that we will grow together and we'll prosper together. I was going to get you Vice chocolate hearts for Valentine's Day. Didn't have time, but we have a little fortune cookie that we're going to give you at the end. So a small remembrance. But the main theme I wanted to talk about today is that Oakland is on the rise, and that we have, I won't go into all the boring statistics. There's a couple hundred copies of the State of the City report if you want to get it out at the table. But let me just go through a couple of the factors. This last year, we created more than 5,000 jobs, and Moody's is predicting that we'll create 8,000 jobs in the new year. We decreased our unemployment also by about 2%. Our employment has been traditionally higher. We have strong pockets of Oakland, and in some ways, Oakland's two cities. On one hand, we're the second most literate city in California, 15th most literate in the country. And on the other hand, I have real deep pockets of poverty, and you'll hear me talk about in the media a lot about 100 blocks. There are 100 blocks in Oakland where over 92% of all of our violence, particularly our homicides, take place. There are these ongoing cycles of poverty, which I think are unexcusable in our time for those to continue, and that's going to be one of the major challenges that I'm taking on, that because when I believe that I can get more resources to young people in those neighborhoods, not only will murders go down significantly in the city, because we're talking about 5% of the city, but that we can actually put our arms around those kids and we can make a change. And at the end, I'm going to ask you to step up and do your part. We're also a city where all the other economic indicators are looking good. We're particularly happy about retail, and our sales tax went up over 12%, and that's above the statewide average increase last year of 8%. Building permits are up, business licenses are up, hotel tax, partly thanks to the new remodeled Marriott. Hotel taxes are up. And what's very interesting, and for you are real estate-centered people, is that many of those 2,000 permits that are waiting for the economy to come up for business, many of them, those people who have already gotten their permits approved for about 2,000 new units are coming in to start to modify them, partly in reaction to the business climate. When many people permitted their properties, that we were in the middle of the condo boom, and everybody thought they were going to make a fortune on condos, people were coming back and modifying them for a more, probably a stable mix for the future of the city, for office space, some rental, as well as condos, and they're moving in now. So I'm hoping that means that they're planning to go ahead and move with their construction before their permits run out in the next year or so. We have also been looking at generally good stats in terms of the city. Like Ed, I started my year facing multi-million dollars deficits. I had a $58 million deficit. I had very little reserves. We were able to move forward with our unions to get overall across the board, two-tier pension reform, and to give back about 10%. We were able to stabilize and balance the budget once, and then with the redevelopment, the surprise, we spent most of our vacation over Christmas and New Year's working on rebalancing the city budget again. And we did it in a way that we didn't just cut redevelopment, but we reorganized the whole city. We consolidated many departments, we eliminated middle levels of administration, and a lot of that goes to probably the second most important accomplishment that a mayor is supposed to do. I believe that I've hired the strongest administrative team and just want a couple of them to stand. And the Business Times calls them the dream team, and I think they're a dream team for that we are a city of dreams. So our new city administrator, Deanna Santana, if you could just stand. My chief of staff, Ann Washington Campbell, who used to work for Jerry. And in this city, Jerry is the governor. That's the only Jerry we talk about. And somebody who I borrowed back from Ed Lee, a homeboy, Fred Blackwell, who a lot of you will get to know. So I want to make just a couple of points for this year. There are four main themes, I think, of what we see going forward as our city. We're going to build on what is the hole in retail in Oakland. And I have to say, I went to ICSC myself this year, and we're going to go with any developers who are planning on retail who want to go with us. We're going again in May. Because I figured, what's a better symbol to retail that we're ready than a nice middle-class Asian American woman? I think we're demographically the best shoppers in the economy. When I was campaigning door to door, I have to tell you, the women in Oakland will have my head if I don't improve retail by the time I finish my first term as mayor. That is one of their number one goals. And we have interest, I think, in our downtown retail that we haven't seen in decades. And so we plan to really build on that and to work on that. Everyone's bragging about the New York Times, so I won't do that again, although we were also considered one of the fourth best place to celebrate Lunar New Year above San Francisco and New York City. The cultural and the arts scene here in Oakland as one of the most diverse cities in the world. I think we're at 125 languages, and in my family I always say that means 125 kinds of restaurants to figure out and to check out. Oakland is an amazing cultural scene. It's what's attracting this young, very intelligent young workforce. It's also just what makes our young people ready to deal with anywhere in the world, because if you believe what many economists say, that those skills that you need to give your kids the ability to live in a diverse world and economy, and a global economy, Oakland is a great staging place for that. And so we're expecting the food and entertainment industry to grow, not just in Oakland, but in our amazing neighborhoods. Oakland and San Francisco are both lucky to have great neighborhoods, so whether it's the Fruitvale or Rockridge or Piedmont Avenue, or whether it's the new up-and-coming neighborhoods, the Laurel, the Diamond, along International Boulevard, Oakland is a place where there will be continued growth in that. Our second major focus will be continuing to be a hub for new and innovative companies. Oakland has been the home to companies that now seem old school, like Kaiser may be old school, but remember when Henry J. came here, and Kaiser Air is over there, and Kaiser Permanente is over here, nobody knew that probably his most lasting product would be a healthcare institution. He was a can-do capitalist who wanted to provide a fair and efficient workforce, and developed a healthcare plan. And now that was the model for HMOs. It may be the model long-term in how we deal with healthcare in this country. And now we have a new generation of companies. We have Sungevity, which is the fastest growing home solar company in the country, and it just expanded its office spaces down at Jack London. We have Pandora, and if you have an Apple phone, yes, you do probably have Pandora on your phone. And They have helped lead discussion among young companies, and recently we had a open house, so to speak, for about 150 investors, and we basically had standing room only. And they are leading, I think, the discussion of particularly for tech companies. Some of the tech companies, Ed in San Francisco, want second campuses, so we're hoping that they'll come across the Bay, because literally by BART they can be there in 10 minutes. When I go to visit his companies in San Francisco, I take BART. It only takes me 10 minutes from downtown to get to Market Street and get to those locations. Oakland and San Francisco, in many ways, our real estate is closely linked. So I'm actually loving the fact that his rents are going up and that I still have a lot of space here. The third focus is going to be probably some once-in-a-lifetime development opportunities there in the city of Oakland. Oakland, its council made a clear policy to save industrial land in Oakland so that we could have a mixed economy. And we are particularly paying much more attention to the Port of Oakland. I see the port commissioners and the port table here. The Port of Oakland is the only port in the United States. Now, when I talked to the White House, you know, President Obama is trying to double exports. And if he doubles them here in the Bay Area, that's about 6,000 to 7,000 new jobs. And that, right now, the Port of Oakland is the only port that exports more than we import. And so I've been trying to talk Ed and Jerry Brown into doing joint export offices in China, because I think 1 or 2 is not enough for anybody. We really, as a state, need to have probably a dozen offices in China and go into the interior. And that's what I think we need to do both as a state and a region, and that we need to talk about how we're going to share resources in that way. The Coliseum City also will be an amazing opportunity, and those of you who are going to ask those questions about the sports team. All 3 could fit there, but I'm still holding out maybe some hope for Victory Court for the A's. Fourth, Oakland remains sort of the center transportation-wise, and so whether you're looking at now the rail service to Sacramento as being one of the most heavily used in the state, or you're looking at the fact that we're the sort of the heart of the BART system, and with our good AC transit system throughout the East Bay, and now with the airport expanding more and more flights internationally, Oakland will continue to be a transportation hub, and we'll be working very hard on federal and state investments. So those are the 4 main strategic areas that we'll be looking at. As mayor, the things that I've been particularly trying to be unpreoccupied about and to try to get more involved in is to look at our service areas, and we'll have an upcoming joint conference in May to look at some of these sectors, including healthcare, including transportation, and particularly the entertainment and retail and trade areas in May. So look for that. Sign up for the tours. We're going to basically have basically a conference on buses. We're going to take people to major areas of development, so we hope that you'll join with us in that. I think it's the first Friday in May. Lastly, Oakland as a city is on the rise in many ways, but is also sometimes a city that has a history of dealing with having the highest concentrations of poverty still in the Bay Area. And that poverty doesn't just affect us in Oakland, it affects the whole Bay Area. And so when you go out, you're going to see these little cards, and this is my ask for the year. And I'm still sort of a school board member at heart. I'm going to be asking particularly the Oakland East Bay companies to join us in 3 initiatives. You may know that when I started as mayor, I asked Oakland to come forward to get 2,000 mentors for our toughest kids, and we're at about 1,000, so 1,000 to go. Secondly, we're asking companies, particularly with the cuts in the federal government, the summer job program, my goal is at least 1,000 jobs. We're about halfway there. Consider giving a job. Think about your first job, and particularly think about young people who may not have people who have traditional jobs in their families. What a difference that makes, what a world that opens to them. And thirdly, something I'm just stealing from my adopted city of New York, where my husband was in medical school. We lived there in 7 years, and they had a fresh air fund. There are a lot of kids in Oakland. I'm the chair of the Chabot Space and Science Center, and when they come up, they ask the staff, are we still in Oakland? There are so many kids in this city who have never been outside of their neighborhood. So I am particularly running this campaign in the 100 block area. This is the area where I believe that we have to change the city forever. So those are my asks, and let me just end with this. Oakland, we don't have a corporate tax. We will give, however, discounts in our business tax and in our sales tax to attract new businesses. We have a pretty active enterprise zone, and we have rearranged and reorganized all of our economic development services so that we can maintain them despite the loss of redevelopment. So Oakland is open for business. We welcome you. Our weather's better. We have great restaurants, and we hope you'll join us in the great diversity of the city that we really, really love. So we don't think we're second to anyone. San Francisco is also often known as the can-do city, and we also believe that we're the can-do city, but we are really part of a Bay Bridge economy, and our futures are so linked to each other that we'll rise and we'll fall together. And so thank you for coming to this side, so many of you who did come. Please join us on a First Friday. Join us for some of the best art galleries and restaurants and food. And it's basically sort of a party on a First Friday here in Oakland downtown. And if you're coming early, give my office a call. We often pour a little bit of wine on a First Friday and invite you to by the mayor's office if you're new to the city or if you're looking for real estate. Fred can help you at any time, but we often will show people around on First Fridays. So thank you very much.
Thank you, Mayor Kwan. Yeah, throngs of people on First Friday. Now to introduce for the Q&A portion, and again, hold your cards up if you have a question, please welcome Dan Angel, President and CEO of Golden Gate University, who will introduce our moderator.
Good morning, everyone. Recently, I saw a sign coming down the highway, and it said a simple message. It said, paradigms may have changed while in flight. A lot of change is going on very quickly, and we're all working on it. At Golden Gate University, we've been part of this greater Bay Area economy for 110 years. But we're looking at the future, and we have a three-point formula to get there. Sustainability, enhancement, and trying to reach our potential. And you know what? That's the same program we all have here in this area, and trying to make change for the better. It's our privilege to be here this morning and help sponsor this event. We want to thank Mary Huss, who is a member of the Board of Trustees at Golden Gate University. Today, my job is to introduce Jim Gardner. He is the managing editor of the San Francisco Business Times, and he coordinates both the print and online slides of a very active operation. He also writes most of the editorials published in the Business Times each Friday. And he's moderated this mayor's event for the past several years. Please welcome Jim Gardner, managing editor of the San Francisco Business Times. Thank you.
Well, thank you, Dan, and thank you, mayors, for spending at least the first part of Valentine's Day with 700 of your nearest and dearest. And Mayor Kwan, I apologize for remaining preoccupied for just a moment here, but I would like to be able to, as no doubt you would, to put the whole Occupy episode behind you. And I think a lot of Oaklanders and those in the Bay Area would like to do the same. Is it fair to regard Occupy as now something in the rearview mirror for Oakland, or are you expecting further disruptions at the port and elsewhere in the city?
Well, I think the Bay Area has a group of anarchists, and I mean, before they became the Oakland occupiers, I think you remember 2 years ago, we had a lot of the bank demonstrations in San Francisco. And I think it's a very similar group. You had a lot of broken windows, a lot of constant demonstrations, and everybody was wondering, if this was after Seattle, the International Monetary Fund meeting, and everybody was wondering when they were going to leave there. Well, they did, and they came over and seemed to hang out in Oakland for a while. So I think we have a particular political element in the Bay Area that other people don't have. And I think that people, when they were looking at what was happening in Oakland, couldn't figure out what was happening in Oakland. That's the difference. But I don't think it's fair even to call that the whole Occupy movement. I mean, the Occupy movement, there's a general sense of Oakland in the world and in the US that there should be some more income equality, and there is a broad group of people in Oakland. I think that was one of the hard things for me as mayor, to get the city to have consensus around it, because people are very sympathetic with that. You know, you're going to have several initiatives on the state initiative around income tax, around taxing oil companies, et cetera, et cetera. That is something that's not unique to Oakland. I think that the very small group, and then Occupy in the fall began to fall away into different groupings. So you've got groupings that will be doing purely electoral measures on the state. You've got unions who are going to do their thing. You've got groups of people who've been working around foreclosures for a long time in Oakland who are not part of Occupy, who continue to do their work. And then you have a very small group, about 200 people who've been involved in the violent demonstrations. And when we were able to actually arrest several hundred of them, the stats were pretty stunning. I mean, they were what we expected. Of the 88 people who were arrested for violence, only 11 of them lived in Oakland. A couple of them I recognize as people who said they just moved here. So it is, I think, a shrinking movement in terms of the small violent group. But I think the long-term issues that Occupy represent probably won't go away in Oakland or in this country for a long time. I'm hoping that that as we've appealed, and it's one of the reasons that I've been willing to debate this at the Commonwealth Club and the Bay Area wide, because most of the people who are coming into the demonstrations, whether it was the Port of Oakland or this recent more violent grouping, the majority, 2/3 to 80% of them, are coming from outside the city. It's the blessing and the curse of being so centrally located. We watch the Occupy demonstrators come off of BART, right? Literally, most of them are coming off of BART. Many of them are coming from the city, from Berkeley, and from the whole Bay Area. And so it is not just an Oakland problem. It is a discussion that has to be, I think, in the whole Bay Area.
If there is another attempt to shut down the port, will the police be directed to take additional steps to stop that from happening, or is it just something you'll have to live with?
I think the port and we will have to work about it, so let me be really clear, because I didn't appreciate the Chronicle headline. It is clear that a lot of, if you know how the port operates, a lot depends on what the longshoremen do or do not do, and not what the police do or do not do. So it's a bigger and broader discussion. We certainly have the resources if we want to do that, but that's something that the port and we are both committed to try to keep the port open, but it's more complicated than police. It has to do with how the longshoremen feel. It has to do with what kind of resources you want to use when. These last closures, several of the companies that I've been talking to the last few months decided to divert or change the times of operation. So keeping it open, not open, means a lot of different things. It's not a simple thing, but nobody should doubt that we're firmly committed to keeping the Port of Oakland competitive and to do what we have to do at the direction of both the port and the port companies and the port leadership.
Okay, to move from the 99% to the 1% in terms of yacht racing, Mayor Lee, America's Cup has been a big story for San Francisco for the last few months, and so far a success story. But recently, it seems that negotiations, and in particular fundraising, have hit some pretty significant sticking points. What's needed to get the process back on track, and what are you doing about it?
Thank you. Well, America's Cup is, we're very fortunate to have landed it in the city of San Francisco, and that was one of the first things I talked with Mayor Jean Quan about in terms of sharing the benefits and also sharing responsibilities for it. We're engaged in discussions, both sides, and actually 3 sides of the Bay, to talk about adequate security for the expected numbers of people that will come here. We're still very excited about it. We know that the budget analyst report was issued this past week, and that caused some concern because they talked about the worst case scenario as well as the best case scenario. Worst case scenario, the money isn't raised on the private side, and we have challenges with the investments and with the agreements that we want to have with the Oracle Group and the investors. And the best side is we make $2 million after $1 billion of economic impact for the whole Bay Area and some 8,000 jobs that will be created as part of this whole ongoing effort. I think we've got the foundation for going forward. I think that the private fundraising is there. We have a good team of people, Mark Buell and Carrie McClellan, to raise that money. I think that the negotiations that are going on with the event authority and our board of supervisors right now to talk about the trade-offs, if you will, with those investments and what kinds of promises in the future a number of our peers and our port property will have in exchange are good discussions and ones that might signal some changes because of certain areas where the public may have registered that they would not like to have certain types of development there. That's all, I think, being negotiated, and we trust that by the end of this month we'll be able to reach that agreement and go forward on the infrastructure work that we're having to do. I was very excited to help physically knock a hole in the wall at Pier 27 to get the cruise ship terminal going. I know that the port for decades have suffered from non-investment, and that non-investment has allowed half of our piers, if not more, to deteriorate over periods of time. We're very lucky that this yacht race, one of the world's most watched sailing races, have turned the corner with us, allows for this private investment of over $100 million to be invested in our piers. We haven't seen that kind of investment in several decades. But I've often said this, Jim, I'm no longer looking at this division between 1% and 99%. My dialogue in San Francisco is we're a city for the 100%. We want people to be successful, but we also will create an atmosphere where that success will be shared. And you have a mayor, and I believe you have a board of supervisors working together to create the new generations of philanthropic programs that we must have. Something that I learned from working for a very intense year with Warren Hellman, who was a billionaire in his own right, but he created the right foundations. He reached out to youth. He connected the gaps in education. That's what I want to do more and more with people like Mark Benioff and Zynga and some of these, and Twitter and all these companies that will turn the corner, and we'll have probably a cadre of billionaires. At the same time, they're true San Franciscans. They'll demonstrate how they want to work with the city and how we can create jobs for everybody.
It's been a pledge up till now that no public money would be spent on staging the America's Cup. Is that a promise you can still make?
I'm still very confident that we're going to be dependent on private investments to make sure that the America's Cup is successful, and that the $32 million, 12 of which has already been raised and committed to, will succeed in their ultimate fundraising.
Mayor Kwan, as you referred to, Oakland's had a bit of a hot streak recently, last few years, in attracting tech companies, Pandora, Sungevity, hear rumors of there possibly being a couple more. The slide we saw from Dan Cressman earlier indicates that rents are about to go off the, well, if not off the charts, at least up the escalator in San Francisco. That's historically been a very good period for Oakland to recruit companies over the bridge. Are you expecting that to happen again, and what role will your city administration play in encouraging those companies to come to Oakland?
Well, I try not to get in trouble with Ed too much by venturing over there too much, but we have set up a team that's willing to respond and take people out. As we said in May, we're going to be doing a very broad outreach to investors and communities, so we invite you all to come and sign up to one. If you took the lower rents, the fact that we don't have a business tax, a payroll tax, the discount that we give new companies moving to Oakland on their business tax, and if they use the enterprise zone, that company would save about $35 million over 5 years. Obviously, I'm not trying to just steal companies from San Francisco. San Francisco's a lot of their companies are growing, and they grow naturally. And here we have a very similar climate. We just finished our 100th bike lane. We're right next to Berkeley. The art and restaurant scene is really attracting a very young, very well-educated workforce in Oakland. And so I think we're pretty attractive. I know that a lot of people now are trying to lock in their leases along Broadway, and I think the same is going to start to happen around the airport. And as I said, there are 2,000 permitted units already on the books, and what we see is already action towards people changing those permits so that they're a little bit more diverse than mixed development. And so I'm pretty optimistic that in the next year or two, you're going to see that, plus the opportunity for some of these major new projects. Coliseum City, we see it as being a lot like the Staples Center in Los Angeles. It is where the airport connector meets at the Coliseum. We think the combination of not just the sports franchises, but hotels, other entertainment units, and really, again, this retailed area of retail is going to be an amazing project. We're about to name the company that will be leading that in the next couple of weeks, and I think that's an area that I know there's a lot of interest, particularly for hotels and expansion.
Mary Lee, the flip side of that, the other slide that we saw is that with all the tech growth in San Francisco the last few years, if those companies are going to continue to grow and more are going to join them, south of Market is effectively filled up, and new development is going to be the answer to that. You've been in San Francisco long enough to know that getting anything out of the ground in San Francisco can be a bit of a trial. So how can you clear away some of the obstacles so this sort of development can happen quickly?
Well, it's absolutely a good challenge to have, and I bring back my days at Department of Public Works, where we did do some very efficient processes, and I'm meeting with the development groups on a regular basis. I'm meeting with the technology groups on a regular basis to get their input. We have a good synergy going on with all of the different departments that are engaged, whether it's a building inspection, a planning department, public works, the different agencies as we go through the port. Gotten good leadership at the port with Monique Moyer and others that are really focused on being on the same page with me about job development and about creating conditions in which these projects can go fast. Once entities and projects are out of planning, which is a challenge in and of itself, I want an execution team that is led by my office to make sure that there's no delay in their permitting, no delay in the coordination that it takes, whether it's with PG&E or AT&T or the others. We all want, once that permit is approved, to have those jobs come quickly. And so we have to have that efficient team, and we have created that with all the different agencies collaborating. We have different point people that are already engaged in all of the major projects in the city. And we have project managers that cover Hunters Point, cover the projects like Alice Griffin and the commitments that we have with federal monies engaged, Treasure Island, and of course Mission Bay. I will say that all the years that I've spent, the critical years when Mayor Brown and Mayor Newsom had with the creation of Mission Bay, we really did it right. We used our redevelopment tools in such a fashion that that's why it's so attractive right now. And we have great entities like the Giants who have now got development rights on their parking lot, but we also have a very strong biotech industry that has started. I know Roger Kelly's here from QB3. He's a major angel investment team that has companies like Nectar, Fibrogen, Bayer. They've got their innovation hubs right in Mission Bay, working alongside UCSF for their new hospital and medical research.
So with the redevelopment tools off the table, what are you going to have to do differently going forward than what you've done in the past?
We have to replicate the tools that we use best. And I know that's what Mayor Kwan and I are going through. And I quickly moved to it by creating an oversight committee. Three of my 4 appointments on there were all technical people that had been very much involved in the redevelopment processes that we had before. I would have wished Fred Blackler would have stayed with us, but the mayor did come in and rob one of our best talents, and so I think Fred's been wonderful to us, but he left us with a very good team and good vision and good discipline in that redevelopment staff. So we are transitioning as we speak. Now that we have established with the board's unanimous vote and oversight committee, we're on our way to creating the delivery team, and we've divided up the responsibilities between our city administrator's office and our workforce division in the mayor's office. And so I will personally be overseeing a lot of that to happen, and we made a commitment. We're not going to let housing go. Housing was the #1 producer, was our redevelopment agency, and so I announced at the start of my administration the creation of a housing trust fund and invited all of the real estate developers, housing advocates, to help me figure out how we can create a stream that redevelopment used to have for us, something along the lines of about $50 million a year to keep up with the need to build both affordable and workforce housing are my priorities when it comes to housing. And that's what Mr. Cressy pointing out, is housing is a challenge. Well, we knew that from the start, and so we made a financial commitment to be sure that we take care of that, and so we're in the room now with the best minds. We started the first Housing Trust Fund working group. My conference room was filled. It was standing room only of all these different entities who wanted to come and dialogue about how we can create the conditions in which we have a housing trust fund to go forward to build the kind of housing that we need. Because we know that if we don't pay attention to that, having lost redevelopment, we'll lose the housing struggle, and that will mean a tremendous amount of burden for people who need to live in our city and live in different economic levels.
Mayor Kwan, even compared to other cities, the end of redevelopment seems to have hit Oakland particularly hard. Why is that?
Well, he's lucky. He's both the city and the county, so he got to take over himself. It's very unique. But I think Oakland had, first of all, you have to remember Oakland has historically been a poor city. And so we had many more blighted areas. And I think, particularly under Jerry Brown, we expanded the redevelopment areas amazingly. And some of the projects have worked out very well. You would not... When I started really working downtown, we were still suffering from a lot of the damaged buildings from Loma Prieta. And you don't see that now. If anything, the uptown redevelopment tax increments are ahead of schedule. We'll pay off those bonds that made the whole uptown area the hot place, and why we're #5 on the New York Times list in many ways. But what I think is the lemons to lemonade. The fact that we've had these blighted areas and these long, old industrial areas are now becoming the hot areas. I see the estuary being very much like what happened in Mission Bay and near the airport in Coliseum City too. Those whole areas are going to be massive areas for either research parks or office spaces, as well as an integration of industrial uses along the Army base and other areas that we plan to continue a fairly diverse economy here. Oakland, I think what both Ed and I are saying is, when you're the mayor, you actually do have to represent the 100%. I took my little 99% button and changed it to 100% because as the mayor, we need to grow together the entire city. And in our case, we're looking at an economy that has both industrial roots historically, but is also now developing as one San Francisco. We are always rivals for also the greenest city. New green and tech industries that are coming here. Last count we had 250 of them. And so as we move forward in these new areas, redevelopment was very helpful, particularly in terms of the land and the cleanup of the brownfields. I actually think, he and I are part of the Big Ten mayors, I think that there will be some state programs that will both maintain some affordable housing, the brownfields aspect, and then also the transit-oriented development. As you know, we've already permitted, and our redevelopment funds are already set and should be safe under the scenario for MacArthur, for Lake Merritt, and for Coliseum. So we expect a lot of continuation.
But you can't do the bonds the way you did in the past for future projects in either city, correct?
Some of our stuff has already been okay under the old, the deadline. But no, I think there will be new mechanisms. I think when you talk to the state legislature, I don't think they quite understood what they did. I think they're looking, Steinberg is looking for a way to keep and save both affordable housing and transit-oriented development.
Okay.
And I would agree with what Mayor Kwan said. You know, I think, and that's why I emphasized in my presentation today, one of the most important things that we as mayors need to do is to make sure that we create an investor-confident situation here. Because what redevelopment has taught us is that they had investors who were dependent upon a certain system to work with tax increments. When we've lost that, we now have a challenge, and that challenge is how do we continue with our investors who invested multiple millions of dollars in our redevelopment strategies? How do we keep that investor confident about what we're doing? And we have to do and create new tools, but we also have to signal to them we're not going to upset their investments that way. We have to continue that investor confidence high, and that's how this audience is going to be able to help me and help Mayor Kwan continue the successful projects that we've had, whether it's Hunters Point, Treasure Island, or the Alice Griffith project, and those kinds of things.
Okay. On another topic, you referred earlier today to the attempts your administration is making to change the payroll tax, which you would probably be given a ticker tape parade by a lot of San Francisco businesses if you managed to do that. And the reason no San Francisco mayor has had a ticker tape parade on that subject is that there have been many attempts and many failures to do just that over the years. What is different this time?
I am pushing my own style of communication in this effort, and I've signaled with Board President David Chu, and we are both in strong collaboration with our Board of Supervisors, so that's perhaps one difference is we're not dividing ourselves around this. I think secondly, we have created an atmosphere where all the businesses are experiencing a newfound relationship and level of communication they haven't had in a long time. Third, we're not going anywhere. I'm not going anywhere. I'm not jumping office. I'm here to stay and see this out in every aspect of it. So that I think these conditions offer ourselves a good level of conversation about what it is that we need to replace it with. And we're already working the Comptroller's Office for how any idea, whether it's a gross receipts tax, how does it impact different industries, and what is our 10 to 20-year outlook on those industries, and how could we do this where it's not a sudden thing, it's something that could be quite manageable and expected, there's no surprises in it. You know, taxing and tax structures are all about expectations. And if we can manage those expectations of all the different industry leaders, whether they're financial like Wells Fargo or high tech, or the large employers, McKesson and others, understand what their interest is in this, we'll do it right. And I think the new conversation in San Francisco, at least, is that we have to be financially smart. We just have to be smart about our legislation. Smart means getting that input up on the front end, not surprising everybody about what it is that we're recommending, and then floating out those ideas in ways in which it's not favoring one over the other, but it's what's best for the whole city, and is it pinned down on our outlooks 10 to 20 years down the road.
Okay. Mayor Kwan, you've had a pretty comprehensive house cleaning at the top of your administration, bringing in new executives, new department heads. I think you mentioned in your State of the City address earlier this week that it was something, looking back, you wish you'd done even sooner. Is that a process that's now complete? Do you have your team and the team you want fully in place, or are there still pieces that need to be moved in?
You know, I think Oakland's strong mayor form of government is evolving, and so I think you've had mayors who've been involved in different levels of government. I probably, the first mayor who wants to be comprehensively involved, and that takes really looking at the whole department. I think I waited until I had my city administrator in place because I think it's a team. I wish, there are a couple of positions now in hindsight that I wish I could have moved earlier, but I think that the team is coming together. But I think we're reorganizing, we'll continue to reorganize. Deanna reminds me all the time that we're maybe in good shape now, but we're somewhat dependent on the state pension scene, et cetera, and that we have other institutional issues coming up in the next decade that we have to look at. So we've just finished reorganizing so that we can work, we hope, faster and more efficiently with less bureaucracy. I'm almost worried that we've cut too much middle management and too many administrative levels. We'll see how we operate. I know that she and I just named our 2 public safety officials, the new chief, the first African-American woman to lead a major metropolitan fire department in the country. And we are re-looking at other departments. We have several other openings, partly because of the mergers, partly because of retirements. And I think we're trying to be nimble. And if I were to say anything about what I've tried to do is I've tried to really provide an opportunity for us to have the best and the brightest, to also start growing our leadership from within, giving younger people in the administration a chance to move up, but also to work in partnership with the business community. Cities can't do, I think what Ed and I have both said today, we can't do everything. And if we're going to succeed, we have to do it in new partnerships in different ways. And so we're looking forward to bringing in business advice. I know Mr. Blackwell and I just talked yesterday about as we negotiate with the legislature about what kind of new housing or what new transit-oriented funding mechanisms there should be, that we're bringing together some of the top developers in the city to give us ideas about what they need. I know that both Ed and I are looking at EB-5s, foreign investment, and trying to package. We're not used to packaging products the way that Asians or others are used to when they go and invest in a different country.
That's the green card investment plan,
yes,
isn't it?
It is.
You bring in, is it 500,000?
For 500,000, you get
area?
2 visas, and then people bundle them in the packages of 20. And I've heard people come with as much as $500 million that they want to invest, but they want a clear return. They want a bundled package, and we're not used to doing that. And I know that in America, we're sort of struggling to how to fully take advantage of those. All I know is that the Yankee Stadium got $72 million in EB-5s to build it, so I've been studying that pretty carefully.
That was certainly a blighted project that required assistance.
That definitely did.
The Yankees always need money. Marilee, you courted the tech industry pretty heavily during your campaign. Not sure if it's more properly referred to as an election campaign or a re-election campaign. But in any case, you formed a tech advisory committee at that time. I'm not clear if they're still in existence, and if they are, what sort of advice you're getting from them.
Mm-hmm. It is very much in existence. SF City, Citizens for Initiative for Technology and Information and Innovation, is a group of immediately 100 technology companies who have formed a new relationship. It's almost considered to be a technology chamber of commerce, if you will, to advise us on a number of things, and they set out consistent with my priorities. They wanted to start creating not only their jobs that they're already establishing, but post them in a way in which it could be reached out to all of San Franciscans who wanted those jobs. So that was number one thing that they did. And second thing they found out that they're helping me create is a employment training center where the skill sets of these technology companies are being identified, and then that skill set will be the center of that training center. And the Employment Training Center, they are funding themselves. And then they're going to be connecting up that training center with our schools so that there could be likewise the linkages with our high school kids and our junior high school kids. What curriculum do they need to really be good at in order to get into the Zyngas and the Salesforces and the Twitters of the future as they come out, hopefully after college. That's the commitment of SF City. At the same time, I appointed the very first, and I believe it's the first in the nation, Chief Innovation Officer for the city of San Francisco. And Jay Nath is housed right in my office. He's my connector to SF City. He's my connector to Code for America. Code for America is a nonprofit of technology companies that does what they call hackathons, which is their creative word that they use to come in and help government re-look at the way they deliver services, the way they do business, and use the innovation of the technology world to overlay a process in which new ideas about how to deliver services more efficiently can be had. So with both our relationship with Code for America and through our Chief Innovation Officer working with SF City, we've got, I think, the beginnings of a brand new relationship that I think will bring us closer to the business needs of that new industry, but at the same time, allow us to change the way we do business so that we can be much more responsive to that.
The first year I did this breakfast with Oakland and San Francisco Mayor, it was Willie Brown in your seat and Jerry Brown in your seat, and we had several questions about the difficulty of building stadiums in both cities to retain teams here. So it feels a little like Groundhog Day, that Lord knows how many years on we're still there. Mayor Kwan, you really seem to be on the hot seat here because you've got 3 professional sports teams, all of whom in the nightmare scenario could go elsewhere. I know you've just approved a $3 million grant from the redevelopment fund to look at the Coliseum. Is there a reasonable amount of money that's within Oakland's ability to spend that can guarantee that these teams remain here, or do you have to be open to the possibility that one or more of them could leave?
Well, our goal is to keep all 3 of them. That's the one thing I don't want to share, Ed, is my sports teams. But we will clearly be dealing, I think, with some announcements that I don't really want to talk about that much about around Coliseum City. I think we have to wait to see how redevelopment totally shakes out to look at some of the other options. I'm feeling genuinely optimistic, and the family joke is if I weren't so optimistic, I wouldn't be mayor. But I am optimistic about the teams, and we're in discussion with most of the teams or Major League Baseball on all 3 of our teams. And I'm particularly excited by the Coliseum City concept and how we already own the land there. A lot of the studies show that there's a lot of interest, ability to privately finance a lot of that project. And so it's something that I think I certainly am spending a significant amount of time on, as I am all of the major new development projects. I think the thing about being a mayor is you actually have to be hands-on on these kinds of projects because these are so critical to stimulate the whole economy in each of those regions of the city.
Is there one of those teams in one of those stadiums that's more important economically than another?
Oh, that's like choosing
Which of your children do you
That's like choosing
right,
among your children.
Yeah, right.
I mean, the reason I'm holding out for Victory Court still to see if I can find private investment is because, baseball brings about 2 million visits. So 2 million visits downtown Oakland at Jack London Square would be a huge boost for both a hotel industry that's coming back, and it's so close to the pretty vibrant restaurant industry that we've already got going in, which is linked by a free shuttle, by the way, if you want to try it out outside your door. We have a free shuttle that links the lake, Jack London Square, and Uptown in a constant circuit. And so obviously, either making the Coliseum other than sports and having it being a hub for housing, retail, hotels as part of the airport connector, and a second convention area for the airport because of it will be right at the end of the airport connector, less than 10 minutes away, I think could be a huge boost for the economy. And so obviously nobody builds teams alone, stadiums anymore. You use it for the multiplier effect and how it helps your economy, whether it's downtown or at the Coliseum.
Mayor Lee, San Francisco's doing their part on the Warriors, and the part that they're doing is trying to lure them across the bridge to a new arena by AT&T Park. What's the status of that project, and who would pay for it?
Well,
I mean, you're going to pay for it from Mayor Kwan if it happens, but I'm talking about financially.
Let me put this in perspective. If there's anything I've learned is that the sports teams are also businesses, and they want to be successful as well. And there is changes. If you're an observer of sports as a business, there have been changes in their own business models. And the Giants have been extremely successful owning their own stadium in San Francisco. It's one that, I think San Francisco has kind of learned a little bitterly, owning your own stadium means a lot of infrastructure investment that sometimes we don't have in bad years. And so the model about the sports franchises who might consider owning their own stadiums is a very interesting, challenging one. It's one that I personally support because it's their private investments that have to be laid out there. And for any arena that we build, I think the reason why there is a discussion that was going on between the Warriors and the Giants was about that very successful model. And so no different than Mayor Kwan, there's some things that I cannot say because I'm not privy to all the details, but I am hopeful that sports teams will look at San Francisco being a great venue, not just for their sport, but if they do decide to invest in their own venue, the venue has to be successful well beyond those numbers of games that might be had there. And we're talking about an entertainment arena, and it's the same challenge with the Coliseum here, because I used to live in Oakland too, and I wanted success all around. You have to have an environment in that place for other things to happen, to have other events that are successful, to make money for all the different investors. You have to have an entryway and transportation infrastructure that supports that. That's what we have in Mission Bay, and I think that's where the attraction is. Details to follow, but I think we're more than just the Warriors. I think there are other sports ideas that are coming forth. Even in my discussions with Jed York, with the Niners, we have ongoing discussions with them about what it is that's the legacy of San Francisco, because they obviously want the name San Francisco 49ers. And that means that there's got to be a constant link with us. So what does that economically mean? And we're in those discussions as we speak.
Well, we have time this morning for one more question, and what I'd like to ask each of you, you were recognized quite rightly, both of you, as pioneers coming into office as Chinese-American mayors of our region's two biggest cities. Now that you've had some time in the job, what has that China link meant to your city? What benefits has it brought? And either one of you can take the first crack at that one.
Well, obviously being the first Chinese Asian American mayor in San Francisco is significant because, as Mayor Kwan knows, we both have generations of history where we had local laws that literally prevented our population, our immigrant population, from voting. It's significant for just so many fronts that I think are all well spoken of already. Having said that, I think that I have been working in government for 22 years, and I've seen what it takes for a mayor to be successful. I've supported 4 mayors. I've run 5 different departments. It's an opportunity for me as an Asian American to not only celebrate this historic vote and recognize how important it is to communities that have suffered for many years, but to take that newness and to share it with all the other communities of San Francisco and show that we can be, if you can take the sports analogy, we can be a Jeremy Lin, if you like, to really play the game well, to be able to lead, to be able to open opportunities for African Americans, for Latino Americans, for gay lesbian communities, to work with labor as strongly as the other mayors had and bring them in to make sure that they're linked with all the big decisions of the city, to unite the city in a way in which, and to say, look, Asian Americans, as you take the significance of this, both appointment and election, we can also be leaders as well. A lot of Asians used to shy away from politics, Jim, as you know, and we used to, generations before us, our parents said, hey, don't go into politics. You know, go into business. Own your own business. Be a financial person. Be a lawyer, Ed Lee. You went to law school. Be a lawyer. Make money. Those were safe things to represent other people, to make sure that we can be literally, I have to say, as American as everybody else, and show our leadership skills and show our values and share those values that are traditionally looked upon as Asian. Strong families, looking out for everybody, making sure that society is safe for everyone, and then looking at the whole family as a whole for everybody. Are values that I very, very lucky to share as the first Asian American mayor of San Francisco.
Erquan, as our host city this year, we will give you the last word.
Well, sometimes people ask me, is being mayor as the first Asian American, or is being mayor as the first woman more difficult? I would say the Asian American community has come into its own, and we still have a few glass ceilings to break. And I am very proud of Ed, particularly being elected in San Francisco, because that's where the Chinese Exclusion Act and all the anti-Chinese legislation started nationally and historically. And my family and I helped found the Asian American Studies at Berkeley, and so we have a just very deep sense of history. And But to put it in a more human terms, the other day, my staff and I were going somewhere, and a group of young students stopped by, Black and Asian, typical of downtown Oakland, and I stopped to take pictures with them. And he said, you know, you really got to go, Mayor. And I said, you know, when I grew up, I never saw anybody Asian on TV who wasn't a waiter or had a thick accent. And I understand what the symbolism is for hope for young Asian Americans. But I think in my city, because we're so diverse, it also just means that anybody can become mayor, just as President Obama's election was so important for a generation of kids of all colors, breaking those barriers. So I think that's important. But probably what's been as surprising, I don't know as much for Ed as that when I was elected, I think I've told the story to other audiences, that I got emails as soon as I got home from Shanghai and China, and recently one of the members of the consulate staff says, you know, you're probably known by more Chinese than by more Americans. We are in such of an interglobal economy with the media and internet that the ties that we mean personally, internationally, probably may be a role we haven't quite totally unfolded. I know that I feel that we need to market the California brand in Asia more effectively. We need to do that more collectively, private and public partnerships. That's an important market, particularly representing the Port of Oakland right here on the edge of the Pacific Rim. That's a huge part of our future economy, and I think we play some personal role. Oakland and San Francisco are our usual stopping places for Chinese investors and for Asian politicians, and we play an important role in building that future global economy. And so that's something that I'm really going to continue to focus on, and it's not just selling Oakland wines, and I do have 13 wineries in Oakland, but representing the host state and the economy, with the Port of Oakland being really this only port that exports more than we import. We need to build onto that, and when we build onto that, it helps the whole region.
Well, thank you. Thank you to both of you.
Thank you.
And best of luck in the coming year.
Thank you.
Thank you. Let's have a huge round of applause for our two great mayors. Thank you, and thank you, Jim Gardner, for a great job of moderating. And thanks to all of you. I want to just thank again our sponsors, Grubb & Ellis, our partner, and City National Bank, Golden Gate University, Kaiser Permanente, Webcor Builders, and Wendell Rosenblatt and Dean. Thank you, mayors. We really appreciate, we wish you great success this year, individually and collectively, and all of you, we hope you great prosperity in 2012. Thank you. We'll see you next year in San Francisco.